Alright, awesome. So some new stuff to go over, and it's gonna be a little bit different than it usually is, because we're in an interesting and really good spot right now in cryptocurrency. So what we're looking at here is the MACD, which is this right here. Then we're also looking at the RSI. So what you can tell right off the bat, if you're experienced and you know some TA, is that what I'm pulling up right here is called Bearish Rsi Divergence. So usually when the price goes up, a lot of people think that it tends to go up higher, and that's not what we've seen. We've seen it go sideways, which is really good. We saw it cool off, and that's what it tends to do. Price action tends to come up, come back inside these Bollinger Bands, this blue line right here. And when that does happen, we lose what's called bullish momentum, and that's indicated by the relative strength index, which is right here, and it's also indicated by our strength index. When this is a dark blue, like you can see right here, that's showing a very strong trend upwards. As we start to lose momentum of the trend, that starts to change, and this white indicates that it's changing, and then the red means that the MACD, it's the moving average is diverging. They're crossing, and that's starting to show a downtrend. But regardless, what I'm specifically talking about is this is called Bearish Rsi Divergence, and then that's the same thing right here. And basically what that means from a technical standpoint is it means the price is setting higher highs, and the oscillators are setting higher lows. So if you really zoom in on this, the prices right here are the RSI indicators right here, and we're moving downwards. You can see this slight slant, which is really exacerbated in the R as I was in the MACD. So what that means is, and what I told my trading group earlier, actually I think it was right here or right here, and we've actually corrected down a little bit since then. And VPR is really important, because I think a lot of people in the group were thinking, okay, well maybe it's gonna hit this giant VPR support on the 4-hour. I said no. I was saying price action most likely is going to come down, and it's going to test this EMA ribbon right here. So that's what I'm expecting, and why I'm expecting that is because we had this run up, which I predicted, talked about, because we had this really good double bottom play out. This could also be an inverse head and shoulders. I had the measured move. I think it's a little bit short of that, but just right about there. And then we went sideways, which is good to cool off the Bollinger Bands, because I told you guys it wasn't going to just keep running up. It likes to correct back into the Bollinger Bands, and so it did. And when we went sideways, we lost that bullish momentum that you can see through these oscillators. I'm going to take those out. You guys know I don't really use those unless it's very important, and in this video it was. I'm going to delete that too. So that's what I'm expecting, is for the price to come down. It wouldn't be bad at all. It'd actually be very bullish if it went to 42,700 and bounced. But don't be surprised if it comes all the way down and tests some of these EMA key moving averages. This white moving average is very important. That's the 20. This middle one, which is actually has what's called confluence, when you have multiple indicators lining up with each other, is also, so you got the SMA right here in the Bollinger Band on the 4-hour, and then you have this top moving average right here in the EMA. It could potentially bounce there. That's best case scenario. I don't really see that happening, but we could have a good day in the stock market tomorrow, and that does happen. Okay, now moving on. That's the short term. So what I expect is for the price to come down, bounce either right here, bounce right here, or bounce right here, continue up. Now if that doesn't happen, we can go to the daily chart. Look at that EMA, and that lines up very well with the daily, so you'd expect that to happen. There's no really reason why we should see a correction, yes, but there's no reason why it would be prolonged unless the stock market was really against us over these next few days. Then what we're looking at when we zoom out a little bit on the 4 hour is we're looking at this ginormous head and shoulders, and I really do think that, and I've been thinking this for a while, that we're going to come down a little bit, and this looks very nice, and we're going to come down and then go back up. Once we break above this neckline right here, make it white or yellow. Once we break above this yellow neckline right here, and you can see where I got that from, because you have this close right here. This one's a little bit higher up, you could say it's right here. Then this is when potentially this giant inverse head and shoulders comes into play, and that's has a measured move of 56,000. So that's really what I'm looking at right now, is price coming down, correcting because of bearish divergence, then continuing higher. We close a daily or a 4 hour above these levels. That inverse head and shoulders comes into play, and if you want that drawn out for you, it looks like this is the head, this would be a shoulder, and then this or this right here would be another shoulder, so that's an S. Alright, so yeah, with a $56,000 target, and what that would do, the only thing that I'm really looking at, which is kind of I guess concerning would be the right word, is when you look at the Bollinger Bands on the daily chart, you see that right above the neckline is the top band, and so that doesn't really give us a lot of work to play with if this does play out. So expect, if we do come up, to slowly start to grind our way up, and then really what we're looking at is we're looking at the weekly charts, Bollinger Band, which we can move up to right here at around 66,000, and the real test to really confirm completely out of this downtrend is going to be, I mean, look at how crazy that is. Look how perfect it just hit that top level right there. And this is the weekly chart. It closes in 3 days. This candlestick is extremely bullish right now, so that's going to give a lot of momentum on the weekly, and closing above this EMA right here should not be underestimated. That's huge. Monthly chart, let me delete this real quick. So many of them. Make sure we're still recording. My thing's always messed up. Alright, tight. So this is something I was a little bit concerned about. This is called a Doji Candle, and it's a sign of a reversal. Now it could be, if you go to 2 month, this just looks like a regular doji, maybe a butterfly doji. It's not terribly bad. In context, it usually means corrections. I don't think it's gonna mean a correction. Sometimes it's called a shooting star, an inverse hammer. I was a little bit concerned about this, but I thought about it, and I mean, the month just started, so there's plenty of time for this to continue to go up. And once we hit that measured move, that's going to be a nice, on the 2 month, bullish engulfing candle stick pattern. So it looks good. I'm not concerned at all. And so that's what I'm looking at right now, is really looking at the weekly chart, and watching this slow, steady grind up. These are going to be all of our resistances, obviously, because that's what was resistance in the past. So it's going to be what's resistance in the future. And then I've been telling you guys about this level at 47 for a long time. We never hit it, so that's why I haven't been bringing it up recently. But basically what that means, everything I just said, to break it down very simply, is that price action, it's going to go down, it's going to come up, it's going to slowly grind up to our measured move, and it's going to take some time. That's what that means. Alright, so that's the video, and it looks pretty good.